Welcome to my channel on long-term investment and planning your future retirement. It's about managing your money and securing your future. As we discussed yesterday, we are going to start our journey into technical analysis today onwards. And before we go into technical analysis, we'll go to starting of what is the equity investment. So equity market, also known as stock market, is a platform where shares of companies are bought and sold, giving investors an opportunity to participate in a company's growth and profits. Investing in equities allows the individual to build wealth over time through capital appreciation and dividends, while also exposing them to market risk. And it plays vital role in channeling savings into productive business activities, making it a key driver of economic growth and personal financial planning. So this is what we are going to do: the personal financial planning into equity investment. If you remember, in the early 90s, India has opened its market to the global investors, and since then lot of financial foreign investors have invested. Lot of sectors were open to the foreign investment, like banking, insurance, telecom, airlines, everything. And as the services and those products have grown, we have got used to it, and we have got used to enjoying those services, buying those retails, by investing in fintechs and all those things. So as long as we are going to continue to use and spend the money on those services, those businesses are going to grow, and that is where the investment opportunity is, and that is how we are going to grow our investment through equity investment. Before we start about equity investment, we want to be sure what is the difference between trading and investing, because many times we interchange those words for using what is the investing and what is trading. Sometimes we are trader, or we are trading into securities, but we are investor, and someone who is calling investor, maybe he is a trader actually. So we are going to see what is the difference between trading and investing. Trading is like a quick game for short-term gains, while investing is a patient strategy for long-term growth. Trader invests for short-term, whereas investor holds on to asset for long-term. Short-term for trader could be any time between 5 minutes to 5 days, and long-term could be any time for investors between 3 years to 30 years. That is a big difference between the trader and investor, trading and investing. What does trader do? He buys goods from one person and sell it to other person. That is what the trading is. Investing is about you are putting your money into business. You are owning that part of business. So investing focus on the creating wealth over the long term by minimizing the risk, whereas trading involves the risk and loss of capital. SEBI has already shown its studies where 90% of the people who are trading into future equities and options are losing the money. That is what the study shows. And the most of those 10% are the big traders or the institutional investors who have their research teams and the algorithms to support them. So in the short run, market is like voting machine. So it only selects who is the winner and loser. But in the long run, it is a weighing machine. So everyone who stays invested in good and quality companies for long run, everyone wins. Nobody loses. The stock market is a device for transferring money from the impatient to patient. That is from traders to investors. And only those who are patient make serious money in the long run. That is well said. That patience is what we need in our long-term investment, and that is how we are going to make our money. So before we go into trading, all the chart analysis and technical analysis, there are two different school of thought. One is the technical analysis, other is the fundamental analysis. So what is technical analysis? Technical analysis involves the studying historical market data, primarily price and volume, to forecast the future price movements. So usually technical analysis study the previous days, months or weekly data to forecast where the price is moving. The underlying assumption is that all relevant information is already reflected in the price of security, and patterns or trends that have occurred in the past are likely to repeat. So they base their study on the past patterns which are likely to repeat again into future. That is what said, history repeats itself. So that is what the technical analysis is. And key components of technical analysis includes the charts. So technical analysis uses various type of charts, line charts, bar charts, to visualize the price movements. It is more of the graphical representation. And then indicators and oscillators, tools like moving average, RSI, MACD, it which help identify the trends or the reversal point. Then the patterns like head and shoulders, triangles, flags. We are going to study it in our future slides. And then support and resistance levels. These are the price levels where security tend to either reverse the direction, consolidate, or continue its journey. So these are the parts that technical analysis use. What is fundamental analysis? Fundamental analysis involves evaluating a security's intrinsic value by examining related economic, financial, and other qualitative and quantitative factors. This method is more concerned with understanding the underlying business and its future prospects. So that is what the fundamental analysis is. Components of fundamental analysis includes financial statement like company's balance sheet, income statement, cash flow, profit and loss statement. Ratios like PE ratio, return on investment, EPS or earning per share, and debt to equity ratio that helps companies compare companies' performance relative to its peers or industry benchmarks. Then industry and economic factors like considering the overall economic environment, industry trends and market conditions that might impact the company's performance. This is also very important because if the economy is growing, automatically the leaders in those economy, the leading sectors in those industries will grow. And management and competitive advantage, the evaluating quality of company's management team and its competitive position within the industry. So that is what fundamental analysis is. Then what is the difference between TA and FA, technical analysis and fundamental analysis? The one is the focus. Technical analysis focuses on price action and market sentiment, while fundamental analysts focus on company's financial health and business prospects. Second is the time horizon. Technical analysis is often used for short-term trading, as I said, 5 minutes to 5 days, whereas fundamental analysis is typically applied for the long-term investment decisions. Then the data use. Technical analysis relies on historical price and volume data, whereas fundamental analysis uses financial statement, economic indicators, and other qualitative data. So both methods have their strengths and can be used in conjunction to provide a more comprehensive view of securities potential. Some investors might use the technical analysis to determine the entry and exit points while relying on the fundamental analysis to select which securities to buy or sell. So this is what we are going to do. This is what we are going to use. That is why I am taking you through the technical analysis as well as fundamental analysis. Our stock selection, our securities will be based on the fundamental analysis, but our entry points will be based on the technical analysis. So first and foremost part of the technical analysis is the chart. What is chart? A chart is a graph that displays the price of stock or any type of investment asset over a period of time. It typically shows the current price, historical highs, lows, and trading volumes. The quantity of securities that were sold and bought on those time period. Either it could be 5 minutes, 5 hourly data, half an hourly data, daily data, weekly data, like that. Single bar or candlestick in a chart will provide you open, high, low and closing price of security for that particular time period. And different type of charts are available in the market like line charts, candlestick charts, bar charts. So here I am depicting those charts like there are 4 quadrant here. The first top left is the line with dots. So here it shows the one line and the dots is the closing price. This is the Nifty Bank weekly charts. So those dots show at what price that week closed. Then top right one is the candlestick chart. It is called candlestick because it appears like candle with body either hollow or dark black. So the white body is the candle when the market was in green, like that week the Nifty Bank has closed in positive strength. The black one is when Nifty Bank open at the higher level and close at lower level. Then like left bottom is the bar chart. So bar chart is like a single bar with 2 horizontal small line which shows opening and closing, and the right bottom is the line chart. It is only the line, and those points where it slightly deviates or bends, those are the closing points. So this is the same stock like Nifty Bank chart shown on 4 different type of charts. So these are the types of charts. So charts can be used by themselves or in conjunction with fundamental analysis. Charts can be used to time entry and exit point by themselves or in the implementation of fundamental strategies. Charts can also be used as an alerting device to warn trader that something might be changing in the market's underlying fundamentals. How? Because charts show you the graphical representation, the security movement for that day. If there is a high volume and price is shooting up, so it shows that there is something happening or some news is coming up. And whichever way you choose to employ them, charts can be extremely valuable tool. In our next video, we will cover trend and candlestick charts. It is always said trend is your friend, and there is a good reason behind it. And candlestick charts will help you identify the prevailing trend. Thank you for watching my video. Please like it, subscribe it, and forward it to your friend. We'll be traveling this journey in our long-term investment together.